What's up everyone, it's Scotty with MoneyVest. So let's talk about Nvidia stock, considering there's been a lot of discussion around Nvidia as a company. And we already know that there's been, of course, a lot of back and forth with where the fair value is on this stock as well. Just give me 1 second as I pull up my spreadsheet on where I calculated Nvidia's price target, fair value. There was a lot of discussions around that as well. So in this video, my goal here is to break down the earnings expectations, everything that's coming up for Nvidia next week, because they are going to be reporting numbers on Wednesday. And then of course, go over the technical analysis and also the game plan for Nvidia moving forward. So hope you all enjoy this video, and this is going to be your full detailed analysis on the earnings preview for Nvidia that are coming up. Make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. We got over 50 plus members only videos that you can watch, including my entire 30 stock shopping list with buy targets, as well as our MoneyVest index, and of course access to all the Discord channels, including trade alerts and ideas and options alerts as well, and the beta access to all the MoneyVest.com data and the platform that we're going to be launching for all the members only. And also a lot of our individual courses, almost all of them are 50% off. Coupon code is going to be May50 if you want to take advantage of that. Both this and the 16% annual discount for Patreon expires at the end of this month. So link's going to be down below if you're interested in taking advantage. So first things first, let's take a look at Nvidia's expected revenue and earnings. So $24.6 billion is going to be the analyst expectations for the first quarter fiscal year 25. That's what they're reporting for, by the way, Wednesday, May 22nd after the bell. So if you come over to Nvidia here, they're reporting again, like I said, Wednesday, May 22nd. After the markets close, that's when they are reporting, right? So revenue expectations, 24.5 billion, 24.65 billion, so in and around that number. And if you compare that to where we were same time last year, right, that is a significant increase on a year-over-year basis. So first quarter fiscal year 24, they reported $7.19 billion. And in the fourth quarter of 24, they reported 22.1 billion. So not only are they expected to increase quarter over quarter, but also year over year, of course, from 7.1 billion to 24 billion. That's a little bit over, more than three times the revenue, right? So that's going to be over 200% increase for the company, for Nvidia, in terms of revenues. And if you come down to the bottom line, that is just absolutely insane growth, because $12.87 billion in net income, that is up from quarter over quarter of 12.29, and year over year of $2 billion to $12.8 billion. That's six times, or in other words, 500% increase to $5.17 versus 82 cents per share year over year, and $4.93 quarter over quarter. So stellar numbers expected from the company here. And another really important metric is going to be the data center revenue. Nvidia has positioned itself as an early beneficiary of artificial intelligence, as we already know, with the AI boom after receiving a shout out from ChatGPT maker OpenAI at its recent GPT-4o launch as well. Nvidia's data center segment has grown rapidly and increased demand for its advanced computing chips, and data center revenue reached record $18.4 billion in the fourth quarter, beating the record it had set in the prior quarter, and more than 5 times what it was a year earlier. And the company estimated that around 40% of the data center revenue in fiscal 2024 was AI interference as well. And just take a look. I mean, this is just absolutely insane how parabolic that growth has been. This is only the data center revenue for Nvidia that has gone from 3.6 billion to over a record high of 18.4 billion in the final quarter of 2024. Just absolutely insane amount of growth here, 4, 5, 6 times more that they're able to generate. And for data centers that are optimized for throughput, Nvidia delivers an order of magnitude reduction in cost and power, is what Jensen Huang wrote in a letter to shareholders. And the data center segment could reach a fresh record, and this is for the first quarter fiscal year 25, a fresh record of over $21 billion in revenue for first quarter fiscal year 25, according to some estimates here. And again, there's also going to be the Blackwell ramp here. Nvidia unveiled the Blackwell platform, the company's latest AI powering technology, at the GPU conference in March. And the platform included Blackwell GPU, which the company said is the world's most powerful chip. And Nvidia hasn't provided specifics about pricing or general availability of the system, but still Blackwell would be available through its partners, including Amazon, Microsoft, and Google later this year. And again, new accelerators and GB200 Grace Blackwell super chip. This was tensor cores for large language models interference as well. And a key focus, of course, is going to be on data center, as we already discussed, H100. So this is from Citi. Citi essentially mentioned, Citi Analyst projects NVIDIA's April quarter earnings total data center to be around 24 billion and 21 billion respectively. And they believe the buy-side estimates are higher at approximately 26 billion for total sales of $23 billion in data centers. And we expect smaller beats versus the prior few quarters on larger numbers, shorter H100 lead times, and gross margin normalization. And going into earnings, we believe investors are focused on GB200 ramp pipeline, potential air pockets in sort of artificial intelligence AI demand, and of course B200's impact on long-term gross margins, power constraints on AI data center rollouts, and sovereign AI in China H20 demand as well. Margin-wise, 72% to as much as 76 to 77% in the first quarter of the new fiscal year is what they're expecting. And opportunities and challenges-wise, Jensen Huang basically mentioned that it isn't satisfied with the company he founded being just a hardware provider. So the business model has envisioned involving offering the best AI chips packaged with top-tier networking kits and software. And this approach allows NVIDIA to leverage its dominant position in chip offerings while maintaining clients over extended product cycles as well. So that's true. I think the company has to go a little bit more on the software side, and that's how they can increase margins over time and also have a more stickier and more recurring business model as well. As we already know, analysts are absolutely going head over heels over the stock here. Prices surged over 95%. And according to IG data, 40 out of the 42 analysts surveyed in the past 3 months rated NVIDIA as a strong buy, with the remaining 2 recommending a hold position. And TipRanks reinforces the sentiment with an outperform score for the stock, 8 out of 10 with 42 ratings, 40 recommending a strong buy on the stock with a very, very high price targets as well. And as you can see, I mean, revenue expectations are continue to explode here. This is earnings expected to go from just a little bit under $3 for the entire year. Actually a little bit over, $10 to $11 to over $51 per share for the company by 2027. And revenue expectations are going from $62 billion to well over $200 billion by 2027. So those are some very, very strong numbers here for the company. Now, if you go over to my spreadsheet on NVIDIA, so this is what we have. And again, I'm going to be doing some analysis, kind of help you understand on where we are with NVIDIA. So what I've done here is, of course, revenue for 2024, 70 billion, net income of just under 30 billion, and shares outstanding of 2.5 billion. So if you do the math here, the actual earnings per share, 11.90, right? So if you come back over to this, you'll notice that the actual earnings per share was give or take 11.90 here. So if you come over to statements, income statement, and then we just remove all of this, and then we come down to diluted earnings per share. We're looking at around, let's see, diluted earnings per share. Where is it going to be that? There we go. Hold on one second. So we got net income available to shareholders. Boom, boom, boom. Where is diluted earnings per share here? Should be here somewhere. Net income, adjustments, net income, basic earnings per share. We got $4.90, so $12 on an annual basis. We're going to put 2023, and there we go. So 11.93. I was looking at quarterly numbers. 11.93, right? So 11.93 is what we have over here for NVIDIA for last year in fiscal year 24. And that's what we have, 11.90, right? So give or take just a couple cents, 11.90. Now, in bear case, base case, bull case, what I'm assuming is by 2027, okay, in the next 4 years, 2025, 2026, 2027, 2028 fiscal year, but calendar year 2024, 2025, 2026, and 2027, we're looking at 150 billion in bear case, which is basically a little bit over doubling in revenue from 70 billion to 150 billion. And then base case 195, bull case 215. And the reason I go for those numbers is if you come over bull case to 2027, analyst expectations are 201 billion, right? So that's what they're expecting for revenue to go to by 2027. And so I'm going a little bit higher than what the analysts are expecting at 215. And that's going to be a revenue CAGR of about 21% to as much as 32%, which I think is very doable for Nvidia, right? If they continue to kind of maintain their dominant position, it's very doable. Net margins of 40 to 50%. Right now we're sitting at around 47. So if you take a last year's net margins here, 48%. And on a quarter-over-quarter basis, 45, 51, 55. I mean, net margins are also growing like crazy. I mean, profitability is insane for Nvidia, but I'm expecting for things to normalize a little bit as demand starts to kind of taper off. There's a little bit more competition. Nvidia is not the only company out there, so margins are going to stabilize somewhere between 40 and 50% is what I'm assuming. So bear case is 40%, base case is 45, bull case is 50, and that gets us to our net income by 2027 of 60 billion to as much as 107 billion, and that's going to be a net income CAGR of 9% to as much as 17.4%, which I think, again, very, very reasonable and doable for the company. And a P multiplier, so this is the price to earnings multiplier, is what we are assuming for Nvidia. Now, here's the thing. If I go with a 30 times P multiple on the bear case with a 9% growth rate, we get to a fair value of $411 and a price target of $720, meaning that Nvidia is already very overvalued by 55% and it needs to come down to validate its intrinsic value. If you go with a base case and a P multiplier of 35, then we get up to a fair value of $702, which is, again, a little bit more reasonable, 24% downside needed for Nvidia to be trading at its intrinsic value with over $1,200 price target by 2027. Now, the bull case is the only case where Nvidia seems to be fairly valued, right? Which is $983 in fair value with a price target of $1,720, which is going to be a close to 100% increase from these current levels, not to mention Nvidia becoming the most valuable company in the world at over $5 trillion by 2027. So the idea that I want to address here is that Nvidia is positioned and priced for perfection, meaning that if revenue is going to be growing to 215 billion, that is an insane growth, 32% compounded annually for the next 4 years, 50% margins that are insane margins, net income of over $100 billion, and then applying a 40 times P multiple is when we get up to the level that where Nvidia is trading today. So if you believe that all of this to be true, then only then Nvidia has upside potential for the future. If earnings come out, very strong growth rates, 400, 500%, it can absolutely rocket to new all-time highs, well over $1,000. But that still doesn't justify the valuation that it'd be trading at. So if you come over to the valuation right now, you'll notice that it's actually quite reasonable on an annual basis, right? So it'd be looking at around price to earnings. I mean, right now it's showing at 79 and a 38 times sales. But if you take a look at earnings expectations for on an annual basis, $25. So if you do the math, 924 divided by 24 or 25, we're looking at 36, 37 times forward earnings multiple, which a lot of people would argue in the comments that, Caddy, it's quite reasonable. It's a lot better price earnings multiple of 37. It's actually not that bad. And I agree. I think 37 times is actually not bad for a company that's growing at a much faster rate. But the question that I have for you is that can they actually keep growing at this rate? If net income this year is actually indeed going to be, let's say, $25 per share, or let's do net income here for this year, right? So $25 times this share count, 62.5 billion, right? Let's just say, for our sake of discussion, let's say that net income is actually going to be $62 billion. Then what do you think the net income is going to be next year? Is it actually going to be growing at 200%? Or is it actually going to be even double, 100% to 150 billion? Ask yourself the simple question and just tell me, like, what do you think the net income is going to be the following year, right? Can the company actually achieve that, right? That's a real question. And if you can answer the question confidently saying that, yeah, I mean, they can easily achieve, $100 billion or $150 billion in profit in net income, then by all means, Nvidia is undervalued. But if you think that, it's kind of getting to some crazy levels, then of course we have to be more objective. We have to understand how the valuation is kind of priced, because 37 times earnings on a forward basis, yes, it's cheap, it's reasonable, but earnings expectations are also quite crazy. Can Nvidia achieve that? If they can, that's great. If they can't, it does open itself to a huge repricing risk. That's all I'm saying. So from a technical standpoint, support level is going to be staying put at $909 down to $845. down to as low as 741. But as you already know that I'm a lot more comfortable in the $600-700 range for Nvidia, because I feel like this is more achievable. The base case is more achievable for Nvidia than it being priced perfectly for a bull case. So I'd be looking at least 25 to 30% potential downside for it to come down to like in the 600s to 700s, and even then I'll be looking at selling puts for Nvidia down at lower levels, and then of course start dollar cost averaging more aggressively, because I'll know that I'm getting a good deal and some discounts on Nvidia. So hope you all enjoy this video. Let me know your thoughts down in the comment section below. Bottom line is that I do believe that Nvidia has a lot of potential. Earnings being reported, I think it can rocket to new all-time highs at over $1,000, but earnings expectations being so high, it's priced for a lot of perfection here. With the bull case thesis in mind, I'll be looking for discounts and some more better opportunities from a risk reward standpoint. But of course, Nvidia, in my opinion, is a tradable stock at the moment. At these prices, it's not an investable stock for the long term. People who are holding from before, congratulations, you've done a great job, and I would still continue to hold if I was a shareholder in Nvidia. So hope you all enjoyed this video, found it helpful. Make sure you drop a like, subscribe to the channel. Links to our Discord, Patreon is going to be down below. And again, 16% annual discount available until the end of this month for our Discord. Get access to all the channels, all the members only private videos. Happy investing. I'll see you all in the next video.